Welcome back. Well, the market's holding well in the green, so let's focus on one of the latest debutants on the last trade. Yatra Online, well, in its first results since listing, the company has reported a healthy revenue growth, while the margins have also expanded. The company has signed 19 new corporate clients during the second quarter. To understand more about it, we have Mr. Dhruv Shringi, the Chief Executive Officer at Yatra Online. Hi, Dhruv. Morning. Thanks so much for joining in. Well, give us a couple of details. Quarter one we have, but how is quarter two shaping up? Are you seeing similar traction on, for your business?
Hi, good morning, and thank you for having me on your show. You would have seen that, we posted strong numbers in the last quarter. The secular trend for the travel industry continues to remain quite strong. If you look at the data for the first 9 months of the year as well, domestic aviation has grown almost at 29%. So we continue to see strong growth happening on the aviation front and on the domestic hotel and holiday front. So overall, the macro tailwinds are quite strong, and that continues to bode well for the industry and Yatra in particular.
Okay, all right. Dhruv, in the first half of the year, have you grown at a pace which is faster than your industry? If yes, what is your updated market share?
Sure. So if you look at the industry data, the industry in the first quarter would have grown about 14.8% year over year. And we guys grew almost in the mid-40s. So there's a significantly faster growth rate than the market that we're witnessing at this point. Our market share would now be touching in the range of about, somewhere in the 6.5% to 7% range of the overall aviation market in India.
But I think earlier you had said that you have a 9% market share in value terms, right? So you're saying your market share has fallen?
No. So in customer terms, it would be around the 7% mark. But because we are servicing more the top end of the customers, right? So the larger companies, the big four accounting firms, the big software technology companies. So the spend share would be higher. The spend share, which is the value term number, would be in the range of 9 to 10%.
Okay, so from this 9 to 10% value market share that you have, what is your target, say, over the next 1 year?
See, our expectation is that, if the market is growing at about, early teens, we would ideally want to grow between 1.5 to 2x of market growth. So our expectation is to continue to grow significantly faster than the market.
Okay. 1.5 to 2%. Got that. Can you tell us what is your targeted margins for this year? I think your adjusted EBITDA margin target was at high teens for over the next 3 to 5 years. But in the very near term, by the end of FY24 and 25, what are you looking at?
See, we're already trending in the mid-teens right now, and we continue to see good operating leverage in the business. So my expectation would be that, we would be somewhere in the mid-high teens in the near term before getting into, hopefully the 20% kind of range over the course of the next 3 years.
Dhruv, how does that happen? What's the roadmap or rather the mechanics of increasing margins to 20 and beyond? Because, corporates want to cut costs across the board. Travel and, stay, etc. There's a cost, and you're an intermediary. The only big advantage of the lever you have is offering a lower cost, right? The lowest cost possible.
Exactly, which is exactly where we come in, right? And we are helping corporate organizations, especially the large ones, organize their spends. We work closely with them in terms of making sure that, spends are happening within policy. There is no leakage of spend that happens. We will work with them in terms of negotiating better deals for them from the airlines and jointly with the hotels. So we provide a single platform, and it's a complete platform play. Once the platform is integrated within the corporate organization, it becomes easier for us to sell multiple products at a much lower incremental cost. And that's where the operating leverage for us comes in as well. So it's a benefit both for the organization, for our clients, where we are able to deliver value by getting them better pricing and making sure that there is much tighter compliance on the spends. And likewise for us, by cross-selling multiple products and services on the same platform, we're able to drive better operating margins.
These clients that you say that you added, usually it's only, a corporate would only have sort of Yatra as an intermediary, or would it have multiple? Are these usually exclusive in nature? That is one. And second, how sticky is this? I mean, do sort of corporates shop around as well if they find they or is it very sticky? I mean, once you sign on, you kind of stay on for a few years.
Yeah. So, like, in terms of the exclusivity, roughly about 2/3 of our top 100 customers are exclusive with us, and the rest would be shared. In terms of, again, the stickiness, see, once we deploy a technology solution and we integrate tightly within the organization, it continues to remain a highly sticky proposition. 91 out of our top 100 customers have been with us for more than 3 years, and 67 have been with us for more than 5 years. So there is a high amount of stickiness which is there once we end up implementing the solution. And do take into account that we are a fast-growing company at this point, so the numbers will only strengthen as we go forward from a stickiness perspective.
All right, Dhruv, from the money that you all raised, you all had also highlighted that you all could be looking at some M&A. What's the outlook out there? Should we hear about something in this calendar year or in this fiscal year? And what could be the potential size of the acquisition?
Sure. So in terms of M&A, that's obviously something that we've looked at closely in the past as well. We've done a few acquisitions that we've successfully integrated, and we would continue to adopt the same model going forward as well. In terms of timings, I think M&As do tend to be a bit tricky from a timing assessment perspective, but it's something that we are keeping a close eye on and actively evaluating.
Okay, all right. Dhruv, we'll leave it there. Thank you very much. Good luck, and hope to speak with you again soon to get a sense of business, maybe mid-quarter or something. Thank you very much for joining us with that perspective. Let's go across.